evening. Welcome to Money Matters. I'm Charlie Shields of Wells Fargo Advisors, LLC, member SIPC. My co-host tonight is Patricia Dunn, Merrill Lynch, also a member of SIPC. And Pat, it's good to see you. How have you been?
Very good, thanks.
Good. Okay. Stephanie Lantz Goldstein is our special guest of Lantz Consulting, and we're going to learn about branding, messaging, and PR, which is a subject we don't talk about too much, but it's very important if you want to have successful sales. So let's get on with the show. Well, Pat, let me start out by talking about the concept of money managers versus indexes. I know you like to use money managers. I've seen articles lately in Barron's saying that everybody's decided all they need is indexes. You don't need money managers. What usually happens after that?
Well, it's interesting. They do seem to be drawing lines according to what type of investor you are. If you're a smaller investor, you tend to use the index funds. They're also very useful in core strategies, well-diversified core strategy. But in this kind of market environment, typically your stock pickers, your money managers, are going to outperform your indexes. So if you're looking to bring in a little alpha to the portfolio, where when the markets go up, hopefully you'll go up more, that's where you need individual money managers. And yes, I do like to use money managers.
Okay, well, good. And maybe an example of that would be, I'm just trying to dream up a theoretical manager. Suppose a manager's pretty smart, and at a certain time he or she sees that the utilities are high PEs, high price to earnings ratios. Consumer staples are high PEs because everybody's been defensive. And then maybe for reasons because people are worried about growth, they sell off the biotechs and the banks and all that sort of thing. A good manager might take some profits on the ones that have high PEs and move their money into the ones that are beaten up. And that might turn out, in the right environment, to be better performance than an index fund.
Absolutely, because you're relying on the manager's skill, the manager's alpha, if you will. How much of your performance is actually being derived due to the skill of the manager as opposed to the market itself.
Okay. And without timing the show, we don't time it. We're not lawyers, we're not accountants. We're just trying to help people think about how to invest, and they should consult their own advisor before they make their investments.
Yes.
Let's talk about the fact that interest rates have been rising lately. The long-term rates have been going up, and there are starting to be some signs of possible inflation. Does that mean the Federal Reserve will be raising rates as we get toward the end of the year?
The consensus right now is after there was no raise in November, it's a much higher likelihood that we're going to have a raise in December.
Okay.
So yes, we think that's going to happen, and it's not that this is unusual, because at the same time the job market is tightening, and as the job market tightens, you have an upward pressure on wages, and all of that spells higher inflation. So it's quite logical that we would have a rate increase in December.
And the side benefit to that, markets, economies do go in cycles. And if the Fed does raise rates for a while because things are improving, that gives them a little bit of ammunition in case we start getting into a recession. It's hard to lower rates when you're at a quarter point, but if we get up higher, then they'll have an opportunity to help soften up an economic possible recession, right?
Absolutely. Raising rates puts more tools in the toolbox.
Okay. Now, you mentioned that wages seem to be going up, and that raises the possibility of inflation. Is this a time that you're recommending gold, or have any managers that manage gold stocks and that sort of thing, or do you just leave gold to someone else?
I leave gold to someone else because gold falls under the category of a commodity. And I don't see a recovery in the commodities market for a while.
Sure. Some of my clients have called and they say, gee, I'm worried about inflation, and my answer, if you must buy some gold, you can buy a gold index and then hope you never make a nickel on that, because if you're making money on gold, it's bad news for your other stuff, you know. But
exactly right. It's insurance.
all right. Well, that's the way I look at it. Okay. Well, it's also, as interest rates rise, one of the things that can happen is the dollar can go up because of that. The relative competition between lower interest rates somewhere else and our interest rates going up might make the dollar appealing. Does that mean necessarily the market is going to go into a correction in the U.S. because interest rates are rising and the dollar's going up?
Charlie, I don't think so. Because interest rates are so low overseas that any rise in our interest rates is going to draw money in from overseas. And I think when money comes in, it's not just going to go into bonds, it could also go into the equity markets. So I don't see that as a negative. How about you?
Pat, I agree with you. I think the fact that the dollar's going up, if it's because we have a stronger economy than places elsewhere,
Right.
that will make people want to invest here. Now, if the interest rates keep rising because we're allowing inflation to get away from us or something like that, then it can be negative. But you can't just assume there's a direct correlation between a rising dollar and a stock market going down. That's
I
the way
agree.
I see it. Okay, well, let's talk a little bit about asset allocation. Sometimes I think the best thing I could do for my clients, especially the worry warts, is to set a plan where every 6 months we just do asset allocation, rebalance, that type of thing. And that way, when they call me up and say, oh, I'm panicking, the market's down, and I want to sell, I can say, well, gee, it's not June 30th yet. Let's wait and rebalance like we always do. What's your approach to that?
Actually, I believe in rebalancing as well. But studies have shown that there isn't any advantage to doing rebalancing more than once a year.
Okay.
So I tend to do my rebalancing at the time of the portfolio review to get them back into where they were.
Yeah. And another way to do that is to say, okay, as long as we don't get outside of some window for each of our investments, we'll leave it alone. And if it gets outside of that window where something's supposed to be 15% and it's gotten up to 20 or something like that, then you rebalance. But anyway, there's a lot of ways to do it. But I think rebalancing is an excellent way to take the emotion out of wanting to buy and sell.
Yes.
Okay, well, municipal bonds. You know, if interest rates are rising, do you want to try to market time the purchase of municipal bonds with your manager, or do you feel like no, you can get a certain amount of tax-free interest, you buy it, you don't get into the, perhaps you use a ladder or whatever? What's your approach to municipal bonds?
Well, with municipal bonds, I think it's more of a story of supply and demand. They're not issuing a lot of new municipal bonds.
Okay.
So there's going to be demand for them. But again, I use a money manager. I don't try to buy my own bonds because they know where the sweet spot is in the yield curve.
Yeah.
And they know as the sweet spot changes because interest rates are rising, they'll adjust the portfolio. And the biggest thing I find that investors have to get their arms around is when you buy your own municipal bonds, typically it's a buy and hold until it matures.
Sure.
But when you use a professional money manager to buy municipal bonds, they're trading those bonds. It's not a buy and hold.
Yeah.
And they're trading them to the advantage of the client.
Sure.
So any time is a good time to buy municipal bonds.
And I think you can have a conversation with your client if you're afraid that long-term rates are going to rise quite a bit. And of course, the leverage out there in the long term can really hurt the value of a bond. So maybe you tell your manager, we want to buy intermediate term bonds while you're waiting to see if rates rise. And then, as you say, they have the skill to buy a non-callable bond and maybe pay more than par to get a high coupon and know when to sell it before it starts to drop in value, and they can get some outperformance. And the other thing is, if you or I were trying to buy individual bonds at our firm, they're marked up by so many people on the way to us that they're paying more than they would if they use a manager. Sometimes you can get the benefit of the manager with very little extra cost because they can get those bonds at such a better price than we can, correct?
And they also are first in line.
Yeah.
So whatever falls down to the retail market are the crumbs that fell from the master's table. So if you want to play in that market, it's best to play with the big boys.
Okay, I think that's good advice. Okay, the third quarter earnings are about done or partway through, and there's some thought that we're maybe approaching the end of the earnings recession, that we're going to start to see things pick up as the economy picks up. What's your thought on that?
Absolutely. I do think that the third quarter of 2016 will mark the end of the earnings recession, and beginning in the fourth quarter, we could finally see the first up quarter for earnings since the first quarter of 2015. And it couldn't come at a better time.
Sure. So some of these people that are going out and measuring how long bull markets last and say, okay, this is the number of months, they might get fooled, right? We could have a longer bull market than people think.
Actually, the charts are telling us that we've broken into a new secular bull market.
Wow.
We went through base building in every sector of the market, and you look at that, and now the tail is coming up out of the top, indicating breaking into a new bull market. It is the unhappiest bull market of my career, because you talk to any investor and say, are you happy? No.
Sir John Templeton, one of the greatest investors of all time, said bull markets end in euphoria.
Yes.
And I say to my clients, are you feeling euphoric?
Yes.
And I believe the answer is no.
No.
Good. Well, let's try to help one of our viewers. We've got Norman Young of Marion who says, how will the small investor fit into the changes coming as a result of the Department of Labor regulations becoming law in April of 2017?
Norman, that's an excellent question. And the important thing to remember, Norman, is that the Department of Labor regulations that become law April 10th, 2017 only affect retirement accounts. You're talking 401ks, IRAs, Roths, 403bs, that type of thing. And this is going to be a significant change for anyone who deals with a human professional. Those who continue to invest themselves, they do it themselves, this will have absolutely no impact on them whatsoever. It will be a major upgrade within the industry because the Department of Labor is raising the bar from a standard of care that has been in existence for 40 or 50 years called suitability to fiduciary. And fiduciary was a standard that prior to this regulation only applied to those who did business at trust companies.
Right.
But in a nutshell, it will be very positive for small investors. Their options for investing will change. Basically, we're going to be replacing commission business with fee business, flat fee business, which will be tied directly to their performance. Fees go up when performance is good. Fees go down if performance is bad. And it will remove from the table any question as to whether or not your advisor is giving you a recommendation that is in your best interest or in his best interest because he's trying to make some sort of secret quota.
Sure.
So how is it going to spill out? Well, there's going to be some huge changes. As I said, there are no changes applied to those who do it themselves. You are on your own. Your success, your failure is totally tied to your own skill. But transactions will be replaced by robo-advisors. And at Merrill Lynch, we're going to call this guided, where the small investor will fill out a questionnaire. And depending upon the answers of that questionnaire, every combination of answers will have an algorithm behind it. And the computer will then spill out, these are the recommended portfolio for you. Okay. So 2 options were the investor and the computer, and then 1 option with a human. And remember, fiduciary doesn't apply until you have a human involvement. And that, for the small investor, will be someone who's called a financial solutions advisor, and they will give you model portfolios with audited track records, something the small investor typically never had before, an annual portfolio review, which many small investors never got one in their whole history, and then some light financial planning. I call it wealth management light.
Okay. Well, I think the one thing the cherry on top of it is, I think they have to, the clients have to evaluate the fact that this is making it make them aware of the special relationship that they have with their financial advisor. The financial advisor is having a tremendous amount of responsibility heaped on them
Yep.
with the new rules. And so you got to be fair to that advisor, and you can't just ignore phone calls and not call back and all that sort of thing. This is a contract where you've got to give the advisor a chance to manage things well, or that advisor can't do their job and they won't want to work with you.
Exactly.
All right, well, thank you. That's an excellent answer, and that's important and timely. I appreciate you doing the research on that, Pat. If you have a question, we're going to put up information right now how to send it in to us.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Now we'll get into the interesting part of the show with our special guest, Stephanie Lantz Goldstein of Lantz Consulting, Branding, Messaging, PR. Tell us a little bit about what you do, Stephanie.
Sure. First of all, thank you for having me here. I really, really appreciate it. And what I do is I tell people, I bring them the people who are going to make them money. And you say, well, who is that? And I say, that's your target audience.
Yeah.
So that's where we start. And that's exactly what I do. We look at your target audience. And from there, we look at your brand, your message. I can take it to public relations, and I'm a media buyer also.
All right. Well, what makes you different from other companies? Because there's lots of branding companies.
Yes, there are. And I would say that's my process and my relationships. So I really believe it's how I work with people. It's all about the relationship, and it's a relationship I bring to the table as well. I'm fortunate that I pick the people or the companies that I want to work with because I want to grow the relationship.
Yeah.
And the value of their brand also is the relationship they have with others. Because that's what we want. We want to have a relationship, our brands, with people. Think about McDonald's. Think about Nike. They have relationships with those that eat at their restaurants or wear their products. And I also say my process. And I think about the process because I look at who is their target audience? Who is that customer or client that they want? And we take that person and then we back map it. So we create a strategy.
Okay.
So I just want to put in, for example, and I'm
Yeah,
sorry
that's
to
what we're
interrupt
going to
you.
ask. I think our viewers and listeners would be able to get insight if you pick out something that's an interesting example of how you have helped someone to succeed.
Well, I want to start it by saying, if you look at a school-age child, you don't look at them at kindergarten and what they need by the time they're in 12th grade. You start with, what do they need at 12th grade? What are those requirements to graduate? And then you back map to kindergarten.
Okay.
So that's what I do with my clients. I say, where do you want to be? How do you want to attract this client? So it's really about who is this client? What's their demographic? How are we going to reach that client? And what is your brand? Does your brand speak to that client? Does your message speak to them? Because your brand remains in the room when you walk out.
Well, that's interesting. So you're having them visualize their future success
Yes.
and then work backwards.
Yes.
Now, I'm going to ask you to go backwards.
Yeah.
Tell me about your early years of starting this.
Well, actually, I'm going to say that starting this came from my childhood because I grew up in a family and we owned some McDonald's. My grandfather did. So I grew up with this real sense of brand loyalty. Didn't realize it till later on. But I wouldn't eat at a Burger King because in those days, I'm going to age myself, because in the 70s, growing up, I grew up in Arizona, we had Burger King and Jack in the Box. And if one of the moms of my mom's friends was driving through a drive-in and they went to one of those restaurants, I wouldn't eat. I refused.
Wow.
Wow.
Just out of brand loyalty. So I learned about what it meant to have a brand from my grandfather.
Okay. So it was a direct relationship with your grandfather? Did other members of your family also influence this?
Yeah, yes, excuse me. My mom did. I think my mom influenced me more on the relationship side because I would watch her, and she was very involved in different organizations. And that also spurred my involvement because I started in nonprofit, and she was involved with a lot of nonprofits. But it was that commitment and also knowing how to manage within a organization and take a lead role. She was a great negotiator. She still is. So,
Well then, how did you go from nonprofit to this? How did you get started in this area?
well, I actually got started in education. So I am a certified teacher, and I have a master's in education, and I was a principal. And as being a principal, I was asked to, at 30 years old, to find them money and craft their board, help them with their board and programming. And one of the programs, or the grants I received, was fortunately with the Penn Literacy Network, excuse me. And they're the professional development arm at the University of Pennsylvania. And through learning and through Dr. Botel Shepard, who was one of my mentors, she said to me, I'd really like you to come be a facilitator for Penn, and how about you do development for us? So I just thought, oh, okay. And then my son has kidney disease, and his dad does. So I called the Kidney Foundation, and I said, I'd like to meet with you. I see you have a walk. You talked to the director here at the time, and he asked me what would I do. And I said, well, this is what I would do. And when you're ready to do that, you can give me a call and I'll let you know what I charge. A week later, I was hired.
I'll be darned.
Oh.
Well, what factors influenced you the most in your life? Background, or did you have an instinct that this is a business you wanted to be involved with? Was it family members that encouraged you to go up and do this? How did you focus in on this as a expertise?
I just had to say it comes from a passion that I have. So I have a passion for fashion. That sounds so funny, but I did spend some time at the Fashion Institute of Technology, and I learned advertising there, and it was hands-on course, which was amazing. So at the time we trade magazines, and I was able to work with the editor of Menswear Daily, and from Child Magazine, she was editor at that time. I had to make my own magazine. We had to go out and put together advertising, and really learned about what it meant to market. And I just love that. So I think that came into play with what I do now. And the other is just, it just happened to happen. There was no plan.
It was born with you, and somehow, as you developed these different skills, you got focused, right?
Yes.
And this variety of experience all grew on itself to get you to where you are. Now, in this mix, were there any particular mentors that stood out?
Yeah, so like I said, there's Dr. Bonnie Botel Shepard. I was also very fortunate when I was a consultant. I worked with Achievability, a great organization in West Philadelphia.
Yes.
And at that time, they were in transition from their executive directors, and Mr. Jess Lawson said he would be the interim director. And he did that without any pay, and I thought it was incredible, and I'll never forget because it was right after the election when Obama was won, and he taught me a lot about the financial side of the business of nonprofits and how to work that and look at that in terms of fundraising and in any sort of business. The concept for your ROI, whether it be a nonprofit or
Sure.
In a company.
I'm sure you can get a lot of challenges going at once when you're running a business that can take up all of your time. How do you achieve a work-life balance and make sure you have enough time for your family and also get the job done?
I make my own hours. Sometimes it's not always easy, but I also learned from past experience that there's a cutoff point. and I will say now to clients, this is it. This is where we stop today. This is my time. And I just have to balance my other part of my life because my work goes home with me. My work is with me all the time. It's in my head. I'm always thinking about it. So just 80 hours a week, I've done it. And
That's the way our business works too. We can't just go home and forget about the stock
Yep.
market. We got to be looking and seeing what's going on and thinking about, do we need another manager to help with a client and that sort of thing.
Exactly. And I just sometimes it's just taking that moment out when the kid walks in the door, or one of my kids does, and they need me. And that's what matters. And when it's your own business, it is scary. Because it's all on you.
That's right.
We got a couple of minutes for another question.
Well, can you sum it up in what you value or what you see as your purpose? Because I think what you've built is wonderful and it's very needed. But if you were to sum it up as to your purpose, your value, what is it? What makes you do what you do?
I love it. So I wake up in the morning every day. I love what I do. That's what drives me. I'm looking at the sign right here, Money Matters. I'm looking at the logo and I'm thinking, what might I do a little differently? And I walk all day long. I mean, that's what I think about. I think out of the box, I can't explain it. I would not stop doing what I do. I just want to do more of it.
Okay. Well, here's your chance for a minute and a half for our viewers and listeners. If one of them was thinking about working with you, talk to them about what you could do for them.
Sure. What I can do for somebody, whether it be a person, so personal branding, because a lot of us need personal branding. We are solopreneurs, or we have our own companies. So I work with people on their personal brand, also for companies. And it's about branding. So we start again, like I said, with your target audience. And I help people. Who is that target audience and what are your core values? What are you definitely not going to give away? And is your brand, does it resonate with your message? So is your product being delivered correctly to these people? When we look at that, and I said, what are you saying to these people? How are you saying it? So, for example, I, as a Generation X, might be on Facebook more than a millennial who's on Snapchat. So we talk about that. We talk about how do you get your message out there? How do you promote it? And I also work with organizations, so associations, events, and events in terms of branding and sponsorship. I'm not an event planner, but from the big end, because it's all about who do you want to attend your event? What's the brand? What are the sponsorship levels? What does that look like? How are you promoting it? It's the same thing.
Great. Well, of course, they'll have to contact you if they want to work with you, but we appreciate you stopping by. Our special guest next week is Francis Human, President and CEO of Oncovi RX. It's a biotech company, and that's an exciting world. It's a pretty volatile world, and it's always interesting to get an insight from someone right in the middle of that business. So we hope you'll join us next week. As far as we're concerned, your money matters.